Yo guys, welcome back. Hope you guys are doing well. I'm going to be breaking down last Friday's price action for you guys on gold and NQ. I took 2 trades, but there were so many setups that was pretty good last Friday, especially on NQ, less so on gold. But yeah, let's get straight into it. Kind of want to be fast about this video so we can get all these sort of price action logic covered across all these trades, so I can explain to you guys how I read the market personally. I'm not saying it's the best, but it's like whenever I'm reading the market, it kind of like shows that, you know, it makes sense. You know, liquidity really does make sense in trading. Anyways, okay, let's get straight into the first trade. As you guys can see, we have the gold chart open right now, and I had one win in London Open, which took out Asia lows and other draws and liquidity here, and then 2 losses on gold across New York Open, which I was really certain of it selling off, because there was a rejection, this 15-minute rejection block here over there. But okay, let's explain the first one first. So coming into the market on London Open, in terms of the draws on liquidity, so gold was just moving up, right, and left this big 4-hour imbalance over here, left this huge imbalance right here, guys. So after price moves up, what it normally does is it usually comes back all the way down. And in terms of the trade itself, this specific trade during London Open was really clean. So I think we've inversed sort of okay, hold on. So first we have this SMT, this bearish SMT with silver, and the trade itself, if we just play out the trade, alright, yeah, so I remember now. So going back to this rejection block here, guys, we had this rejection block on the 15-minute, and I remember what happened. So the trades I took was on NQ. I took 2 wins on NQ, but on gold I just seen this trade, but I had a limit order set up, but it didn't tag me in, because I marked out this rejection block, and there was also this 15-minute bearish fair value gap, and my order was set, as you guys can see, where the start of this wick was above this candle body, and it literally, if you guys can see, look at how close it was for the price to tag me in over here, right? That's about 0.6 pips on CFD. But as you guys can see, if I did get tagged in, it would have hit my draw on liquidity, which was this Asia low, and also this big wick here, and there was also this 15-minute imbalance, which, you know, aligning all these biases together of draw on liquidity, it is a really good draw on liquidity, because whenever you guys see a big wick and it's paired with a high imbalance as well, which is, we have this imbalance over here, it is always really strong draw on liquidity. So in terms of the trade model itself, we had this, where this rejection block was, we had a bearish SMT. Sorry, I should say this one. We had this bearish SMT here. Yes, so we had this bearish SMT here, which with silver, you know, which kind of shows that gold is kind of looking to sell rather than silver. And then we swept this buy side, like all these highs here as well, and we had this inverse fair value gap. So to me, this is what validated this rejection block, right? This 15-minute inverse, creation of this rejection block, bearish SMT and buy side liquidity being swept. And then yes, so the story of this trade was that we just didn't get tagged in because the price swept internal buy side liquidity over here, but it didn't reach our limit order, which I wasn't really I think I was at work this time and I already had my limit order set up to trade the trade, but yeah, quite unfortunate. Yeah, and then these next two trades, I don't really have much to say about these next two trades, but basically again about the rejection block. Since this rejection block was still unmitigated, I was extremely sure that for some reason the price was going to sell off right after here. But what I didn't see was that, well, I did see, but I didn't really react to it, was that the price, look at this reaction from this 1 hour bullish fair value gap. We had this 1 hour, guys, look at this very nice fair value gap from the previous New York session, and look at the reaction that it gave. This could have been an entry model in itself, guys, but as you guys can see, after price taps into this 1 hour bullish fair value gap, the price actually swept this sell side again with an SMT, by the way. Yes, crazy price action, by the way. So this was during London session, London Open as well, like London AM session. We had this SMT sweep and price just went straight up after this reaction. Alright, let me just fasten this. Now, as you guys can see, we're about to get stopped, like our logic here was about to get stopped out because price just, oh yeah, so we had, there's two entries here, sorry. Basically sell side being swept and a bearish SMT over here. For me, I think this was sort of an uncontrolled setup to take for me. I shouldn't have really counted this as a setup because it didn't, my original bias was this rejection block up here. So yeah, this trade got stopped out quite immediately, I think. Yeah, just like that. And then also this one is sort of invalidated my rejection block, which is fine. And okay, so that's gold. And now we'll go over NQ. I hope you guys understood that. I'm sorry if I'm going fast because I kind of want to get through this as soon as possible. If you guys have any questions, or if you guys are actually listening to this, just drop a comment and I'll answer them for you guys. But in conclusion, yeah, gold, yeah, as I said before, I didn't take any trades on gold. I took on NQ, and the NQ I took 3 trades and they hit 3 out of 3. I think the main thing that I want to get out of this gold sort of market breakdown is the way price reacts off of session highs or session lows SMTs and the existing draws on liquidity on the market, which was this 1 hour, the reaction from this 1 hour bullish fair value gap. Like the way price just taps that fair value gap is like, it's crazy. Also almost as if it's intentional. But yeah, so this was a nice sell setup to take for anyone who took a nice one, because price did swipe buy side internal liquidity and it straight away is sold off, changed to a delivery at these lows here. Alright, so that is gold. Now let's move on to NQ. Alright, as you guys can see on NQ, I took 2 setups, but I seen 3, which is this one here, the third one, but I didn't take any orders. As you guys can see, I took sells over here and buys over here, and I'm gonna explain all of the trades, including this one, all the biases and setups for you guys. Starting with the morning trade, London open again is kind of similar to gold, because we sold off right at London pre-market, which was what happened with gold. And if you guys actually see the logic of London creating liquidity for New York session to take out really works, because all these liquidity points that London make, including also New York pre-market right around here, all got swept from this leg by this trade right here. Okay, starting with this trade, the first one, going over the draws on liquidity. Yeah, so what happened during Asia session was we bought during Asia session, and whenever I look at Asia session quite a lot, and whenever it gives a nice range, either bullish or bearish range. In this case it's bullish range. It normally comes back down, get to rebalance the price. In this case, the draws on liquidity was this rejection block over here. So there's some really important draws on liquidity. First is this Asia low. And okay, I think I explained gold really fast, but seriously, there was some, in terms of the logic of gold, it really does make sense. If you guys have any questions, just drop me a message, and you know, every video I'm gonna explain a lot better each time, but I'll try explain this one a lot better, NQ, because as you guys can see, three really nice trades, three really nice reactions, all smashed their TPs. So starting with the draw on liquidity for this trade right here, the first one, we had Asia low, previous day New York low over here. On the 1 hour, this creates a rejection block. Okay, by rejection block, I don't know why that's not showing. Hold on, let me just do this. Oops. Okay, by rejection block, what I mean is whenever there is a large wick like this and another wick respects it, or even sometimes the large wick by itself on a lower time frame, that validates as a rejection block to me. So the draws on liquidity for this Asia session for me was these lows. In terms of the trade itself, during London pre-market, all we had was this instant sort of so first of all we had this SMT, bullish SMT over here, and then we've inversed this fair value gap straight away here. On the 15 minutes, and then I believe my entry model was that it taps and then another inversion. Yes, so this was my entry model here, and then it changed the state in delivery. So inside this 15-minute inversion, we have tapped back into this sort of inverse fair value gap and inversed another one on the 5-minute this time instead of the 15-minute IFVG. And then we had this change in the state in delivery, which is when price breaks through down close candles or up close candles with really good displacement, i.e. momentum. So for this trade, my entry model was exactly this. So SMT at the highs with ES, as you guys can see, ES did not take these highs, but NQ did. Which you guys might ask, why, since this is a bullish SMT, why did I take sells? Honestly, the reason was because the setup in itself, the entry model in itself was incredibly nice, and we had nice draws on liquidity to the downside as well. And sometimes with SMTs, what I've noticed and what I've learned as well is that sometimes when there is a bearish SMT, you can either buy or sell. It can go any direction. It doesn't really matter the direction of an SMT for me. An SMT just indicates that price is about to reverse, basically, and you need to add in all of your other contexts to properly use SMTs. Okay, so this trade, this entry model was inverse fair value gap and change stay in delivery alongside the SMT, and then as you guys can see, price smashes my take profit over here. Why is it not showing my execution arcs? Oh, I think it's because I'm in replay mode. Okay, and then during London AM, bearing in mind I marked this rejection zone right before, like last night, like the night before, I mean. And again, like same to gold, like in terms of the reaction that I gave to the the 4-hour fair value gap earlier, say somewhere here. NQ did a similar sort of movement where it just taps oh shit, I mixed it up. Okay guys, so this is my bad. Now it makes sense. Okay, so previous day low. So, okay, my bad. So the rejection block was actually this one, like so, and this was previous day low. Okay, yeah, that one. This was previous day low, and as my draw on liquidity with a 1-hour rejection block and a previous New York low, as well as my draw on liquidity for this trade. And the reaction that I gave, I'm gonna mark out this same low on ES. Look, as you guys can see, ES swept this low, but NQ didn't, as you guys can see there. What does that mean? That means this reversal can be validated. Now we can confirm this. So we had this SMT here at this low with this previous point. This is the SMT. Now to confirm this reversal, what we want is a change in the stay in delivery, which would have been the entry model for this reversal. Look at that. And the draw on liquidity would be in the next sort of relative equal highs or lows, or the next obvious draw on pool of liquidity, whatever you want to call it. As you guys know, draws on liquidity can be sort of unmitigated fair value gaps, or relative equal highs, relative equal lows. All of that is really good draw on liquidity, and in this case the next one would have been these relative equal highs over here, which is also unmitigated high time frame fair value gap on the 15-minute. So the valid take profit would have been here for this trade. Okay, and down to the last trade, which is arguably the best price action, was that. Let me just go to the trade. Okay. Oh fuck. Okay. Again with the 4 hour, you guys can already see the movement that it did, because trading view, whenever you're in replay mode, it kind of like shows the higher time frame candle as it already is finished, which is kind of shit, but it is what it is. The draw on liquidity, because we've already validated this rejection block, it was so obvious, was that these equal highs and this unmitigated imbalance over here. Oh, let me not use that one. So this is the draw on liquidity to make it clear for you guys. Equal highs and this imbalance that's the draw on liquidity there, guys. And what we had to confirm our bias was a number of things. First, and this trade was New York Open, by the way, guys. But in terms of the bias, so once price sweeps lows coming into session, in this case we are coming into New York Open here, and price has already swapped multiple lows, which is the existing day's Asia low and SMT at the previous New York low, at a rejection 1 hour rejection block, which clearly validates the reversal that's about to happen, because just because of this reaction over here, guys. And then to add on top of that, we had multiple bullish SMTs as well. So we have a case where NQ is stronger to go higher than ES, like 4 times, I think. So first is this one, this bullish SMT here with the previous high in New York session. Second is this low here that we've already said. Third is this bullish SMT over here with London low and this low here, as you guys can see. Over here, this low was taken. This low was taken on ES, but it wasn't on NQ. So in terms of the bias, and also, wait, was there another one? I saw there's another one. Let me check. It was this yet another bullish SMT. Like, how can the market tell us that it wants to go more bullish than what it's telling us? It's actually crazy. Alright, so during New York Open, what did we do? And I took this trade in the 1 minute. New York Open was this line here, guys. I'll mark it out for you guys. 230. What did we do? Straight away, before New York, we went up, and a lot of traders, so many traders, guys, would have been stopped out trading this IFVG, this 1 minute IFVG here. Oops. With this 1 minute IFVG right at New York Open, because of this SMT, and look at the displacement of this candle as well. But guess what? You never trade in the first 15 minutes of the market, guys. never trade in the first 15 minutes of the market, New York market open, because that is where you'll get fucked up. Instead, what did we do? We swept these lows, this internal low, internal low swept, right? Rejection. You guys need to read what the wicks are telling you guys, because listen, the body does the damage and the wick tells the story. As you guys can see, rejection, 1 2 3 4, well, 1 2 3 large wick candles telling us that the price wants to move upwards. Right after this internal liquidity swept, changing the stay in delivery to the upside. And then we came back down with an SMT, came back down, validated this bullish fair value gap because we did not get a candle closure below this fair value gap. Again, rejecting in this area. Look at that. Price really wants to go up now. And then our entry model is this fair value gap to be inversed. This 1 minute fair value gap to be inversed to become an inverse fair value gap. And the change stay in delivery. Okay, and remember, before this trade happens, oh yeah, I don't want to miss this too. Internal SMT. We had 2 internal bullish SMTs, one over here and another over here. It's actually so obvious, it's crazy, this one. And then yeah, so before the trade plays, we have to remember the higher time frame narrative, which is that price is rejected from this rejection block with an SMT, relative equal highs and imbalance at the highs to above the highs. Clear drawn liquidity, guys, is actually mad. Okay, anyways, with the trade, price just smash. Well, as you guys can see, we entered here after this change stay in delivery, went up, and then price consolidated a bit, which I was a little bit wary. I think I had my stop loss at this point. My stop loss was here, invalidating this rejection zone, this one here. My stop loss was set here. My break-even point was these highs, this quite close highs. This was break-even. And then in terms of the risk management, once price sort of broken through these lows after this consolidation, I moved my stop loss here to just cover my position. But what happened? Bang. Look at that. Crazy displacement. Yeah. Alright, so that's the trade, that's the price action breakdown for you guys of last Friday, the 23rd of January. I hope that made sense for you guys. I think next week, I'm not sure how I might do it, but I might lessen the amount of trades that I go over, or the amount of price action that I go over, just so that I can deliver sort of much clearer information for you guys, because I got a feeling that was a lot taken. But honestly, if you guys just paid attention to what sort of price action I was reacting to, and where the manipulation was, where the higher time frame narrative is, where the drawn liquidity is, and the entry model in itself. It will really help you guys with your trading if you guys are in the same position as me. And you know, I gotta remind you guys that I'm not profitable just yet. The reason why I'm making these videos is that I want to be profitable. I'm gonna be holding myself accountable by making these videos, because I know that in terms of understanding market logic, I know I've got it. It's just, as most traders know, it's psychology and sticking to your trading strategy as well. So yes guys, I hope you guys enjoyed that video. Hope you guys learned a lot. Drop any questions if you guys have any in the comments, and I'll respond to them. And if you made it this far in the video, which I doubt, because yeah, I don't know, maybe if you did, let me know. Alright, let me know. Alright, cheers guys, have a good night, bye.